All right. Welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. In this show, we talk about what's going on in the markets and how we're trading them. Today is Friday, August 11th. Stocks struggle to stay positive for the week. PPI higher than expected. Semis sell off. Solar tumbles. UBS gets a win. Plus, we'll take a look at our puts that we are short that could be expiring in the money. Will we get assigned? We'll have to take a look at that. And I'll quickly look at the PowerX scanner to show you how I quickly identify trading opportunities, especially when we get a down day. All right. So if this is your first time here, my name is Mark Hodge. I'm head coach at Rockwell Trading. And although I am running the show solo, we could call it Coffee with Mark on Monday. Marcus will be back. So I know that some of you have been sitting there waiting for his flowing locks and his great commentary and German accent. And for those of you that have enjoyed listening to me, watching me, I appreciate it. But I'm looking forward to having Marcus back. And hey, no hard feelings if you've been waiting for him too. So even though I'm handling the show solo today, I promise that you're in good hands. You could say we have a ton of trading experience here at Rockwell, and we know our stuff. We're not afraid to tell it like it is. So if you are looking for some honest insight into the world of trading, you are at the right place. And with that said, before we dive in and look at open positions that we might be in, or we are in, let's take a look at the S&P 500. And on a weekly chart here, we see the S&P flirting with gains and losses for the week. Actually, right now, looking lower, down 0.3%. This would be a back-to-back loss for the S&P. The NASDAQ pretty much done deal, going to be down for the week, down 1.7%. Sure, can there be a big reversal going into the close? Possibly, but in reality, the NASDAQ will be down for 2 consecutive weeks. And then there's Dow just plugging along, down last week, but the Dow right now up 0.5%, up 0.2% for the day. So the Dow just hanging in there. Blue chips getting a little attractive, it looks like, recently with the pullback. Some of those old Dow 30 are working out this week. Overall for the day, S&P down 0.1%. And the NASDAQ down 0.5% with the Dow up about 0.25%. Now, what's going on? What's the big deal here? Well, inflation data has been the focus. And this morning, U.S. PPI data rose 0.3% in July. This was higher than expected. It was actually a flat reading in June that was revised. And so this was the largest gain since January. The core producer price index, which excludes volatile food, energy prices, and trade services, rose 0.2%. This was up from 0.1% in the prior month. And over the past year, headline producer price inflation was running at 0.8% in July, up from 0.2% the prior month. So long story short, CPI data looked pretty good. The year over year or annual basis on the core reading for CPI was up to 4.7%. The Fed's target is 2%, but PPI data running a little hotter had traders wondering, okay, do we need to be concerned about the Fed raising rates? Is this a temporary blip? Is this a problem? Does this mean that the Fed will continue to hammer the markets with more rate increases? And we see here that initially on this data, I have a 5-minute chart of the E-mini S&P. Initially, when this data was released, the E-minis and overall markets sold off, but have since bounced back. So it looks like there was an initial panic or concern. And then after a little bit of a shakeout there, back trading above where we started before that data was released. Let's look at the CME FedWatch tool and see if this has any impact on Fed funds futures and probabilities for the next meeting. Next meeting, 40 days, 2 hours, 54 minutes, and 17 seconds. And we see that a little bit higher on the quarter point hike, not enough to really shift that, probability. And right now, no hike is still priced into the market at 88.5% probability that the Fed won't raise rates. If we look at the potential hikes in the future, it still looks like March is when traders are expecting that the Fed will cut. Although now we're seeing that the higher probability for May is no change. So this was kind of on a trajectory lower in 2024. Right now, maybe not cutting as quickly in the first few months of, or the first half of the year in 2024. We'll see. I mean, these are the numbers that can change, and there will be more inflation data released between now and when the Fed has their meeting. So you could say that the next inflation report is probably a little more significant for what the Fed decides to do. With that said, though, markets have been all over the place and definitely causing some movement and volatility. We could look at the fear index. The fear index is down just a little bit. It was trading higher, but it's nice to see that we're trading in this upper range. Long term, if we go back about 10 years, I haven't run the averages recently, but I want to say that 17.24 was the average over the last 10 years. And now we're getting closer to that average. So we've been in this lower volatility environment, and at 15.77, it's still low, don't get me wrong, but this lower volatility with a 13 to 15 reading since June, it'd be nice to pop into a slightly more volatile market. Volatility as a trader is your friend. So I'm liking these this pop in the VIX, and we'll just see if it stays. Now let's look at crude oil, since we have some other tickers up there on the watch list, and we see crude oil trying to figure out what to do with resistance and these highs back in April, trading at 83.27 a barrel, staying up on a weekly. We're looking at a pretty nice weekly rally here, up 0.8% for the week. But look at this. Going back to June, 1, 2, 3, 4, 5, 6. This would be the seventh weekly gain for crude oil. Now, let's look at the fear index. No, sorry. Let's look at the heat map. That's what I want to see. And the heat map here. Let's go to the S&P 500. And you see that today, S&P down 0.1%, really flat for the session. But the big seven, the magnificent seven, taking a bit of a hit. Apple flat, but Microsoft's down. NVIDIA is down decent, down 2.75%. Google down, Meta down, Amazon down, Tesla down. And if we look at the lower half, there's some decent green. So that just confirms that the S&P 500 and markets are mixed, although tech and the bigger names right now down, weighing on the market. If we look at the NASDAQ 100, we see that semiconductors definitely taking a little more of a beating. NVIDIA, like I mentioned, down 2.75%. AVGO down 2%, TXN down 1.6%, AMD down 2.5%. I could just keep this open. MU down 1.6, NXPI 3.4. So semis taking a bit of a hit, and there's that Dow, a decent amount of green. Disney down 1.8%, Microsoft down 0.7, but for the most part, the Dow is higher. So let's look at a few market movers. And I want to talk about solar. Let's see. What's the ticker for Maxi? That's what I thought. MAXN. So look at this guy. Down 33%. And getting back to possible support here, a big hit. Now, Maxion Solar Technologies, they mentioned that demand is weakening, and there was a revenue hit. So they beat on earnings because they reported a smaller loss than expected, a big revenue hit. They cited uh, demand issues due to the higher interest rate environment that we are in. So they missed guidance, and investors not liking that. And to be honest, that's carrying over a little bit to our CSIQ trade. So CSIQ down 5%. And with this, a little bit of a sympathy move here. Now, if we look at, let's go back to PowerX Optimizer here, just because I find it's a little easier to analyze some numbers, have everything in one place. Let's look at MAXN. So MAXN, once we catch up here, looks like things are a little slow with everything that I'm running right now. And there we go. So MAXN, look at the fundamentals here on this one. 5 consecutive years of losses. And quarterly, 4 out of the last 5 quarters are negative. So this is not a profitable company. There's no PE. They're losing money. They don't pay a dividend. And this is where early on I looked at Enphase and I mentioned that for me, CSIQ is a much stronger play. In Enphase quarterly, we have 4 or 5 quarters that are positive. We have 5 annual years. Now the PE ratios come down a little bit, but the PE ratio here was so high. And when we look at CSIQ, we see PE ratio on CSIQ is 7.5. 5 years of profits, 5 quarters of gains. And so this to me is out of the solar bunch, the best with fundamentals, or the best stock with fundamentals. And so when I was looking at this as a possible opportunity, support around 35, 36, I sold the 35 put. I got assigned. I've traded CSIQ a few times, made some money on it, and I was able to sell calls. Those are going to expire worthless today. Now it's down a little bit, which of course I'd rather it be trading at 35. I'm not saying that this is exciting to me and fun when a stock's down 5%. But is this a concern to me? No, because right now, this drop is in the realm of normal if I get assigned support breaks and the stock is falling, right? Being down 5 to 10% on a position to me is completely acceptable. And when I put the trade on, I saw support here at 29.30 as well. So the idea was, okay, if this support breaks and if we do fall, where are we likely to grab hold, right? Where do buyers say, hey, this is a great opportunity? CSIQ is trading at 40, now it's at 30, let's buy it, right? And if we look at the chart, this is where I see buyers have stepped in the past. A pullback to 29, it rallies. A pullback to 29.30, it rallies. Pullback to 29.30, it rallies. And then for the year, we have this range between 35 and 45. It could be that it snaps right back next week, and this is an overreaction. But if not, if it pulls back to these levels, I'm okay with that. And I do think we might have a new range, but we might have to be in the trade for a couple of weeks. And that also is expected with a wheel trade when I get assigned. So yeah, I wish CSIQ wasn't down 5%, but at this point I'm not worried, and I do believe we have strong support here. If there isn't a quick reversal, sometimes you get that V-shaped recovery when the dust settles, and you're looking especially at the best player in that sector, right? There could be some weakness, and investors like, okay, we still like solar, let's get into CSIQ, right? There's an opportunity there. It's a little stronger looking at the fundamentals. And it's not down 33%, it's only down 5% when there's some bad news. So I'm still comfortable with this decision, not changing anything, not getting out of it, still holding CSIQ, not worried about it. Now, a few others. Let's go to the portfolio here so we could quickly look at other positions that we're in. ALB looks like it's going to get assigned. ALB trading at 188.38. Marcus sold the 192.50 put. I decided to go a little bit lower at 190. This is one that had some support in this range between maybe 175 and 195. So again, if this support doesn't hold today, it could be that it snaps back next week and we have a great opportunity to sell calls once we're assigned. If it falls a little bit further, I accepted that that was a possibility and maybe it gets back down into these levels. But with where we're at right now, I really feel like taking the assignment and then being able to sell calls for nice premium on Monday is highly likely. So looking forward to that assignment on ALB. GoDaddy. Let's take a look at GoDaddy. This was one we sold the 68 put. It's down a little bit today, but nowhere near 68. So those puts are going to expire worthless. Nice little winning trade there. NEE, another one. It looks like we're going to get assigned. So we've gone from a situation or scenario where we haven't had many assignments and we were looking for good trades to now all of a sudden maybe getting assigned on multiple trades. And this is normal as well. Sometimes when things are slower and you're not collecting as much premium, and then you get assigned, and then everything's happening at once, and that's where again from our experience, our perspective, our testing, and the data we use to make decisions, we find that this is normal and getting assigned when we are picky with our strike prices, trading good stocks, that is where we typically see a boost in income because we're able to collect more premium on those, at the money calls or slightly out of the money or slightly in the money calls and potentially making some money on the stock as well. I'm looking forward to the assignment on this one. And it looks like even though we're down a little bit, there's some short-term support that actually is supported by longer term support as well. So NEE looking good, most likely going to get assigned. PNC, we know down a little bit this week after some new bank concerns, but when we look at the actual issue there with those smaller banks and Moody's rating change, that it doesn't really impact PNC, and even those small banks are still totally stable based on that rating. I mean, that's what they said themselves. And here we see that now after that reaction, it looks like we're stabilizing. So not able to sell calls on this one, trading right around my break even. My break even is 129.35, and right now it's at 128.38. So if I wanted to force an exit, I could sell calls right around these levels here. That's not what I want to do. I do believe we could get back up towards 136, maybe break through that, and that's when call selling gets fun again. So these are my open positions. We talked about the fundamentals here, but I thought, why not just quickly go through the scanner here, see if there's anything that catches my eye, and more importantly, what do I filter out, right? With trading, it's often about deselection. It's often about knowing what not to trade, what is too aggressive or doesn't make sense, and focusing on quality trades. And this is where the scanner and PowerX optimizer really helps because we could filter out by the strike price that we're looking to sell based on the lowest or the min line, sorry, the min strike. This would be the lowest strike where we get our 30% annualized premium. We can filter by dividends if we want to just have dividend pairs, which would be more value-oriented stocks rather than growth. We could focus on the market cap, the PE ratio, the change in percent, how much it's down for the day. We could focus on sectors, so we could exclude sectors that we're already in. We could look at different expirations, ROI, the minimum premium. Based on these settings right here, there's 10 popping up on the conservative list. And this is where I have a few black flags, these black skulls here. These are never trades for me. And this is where both Marcus and I, we are not fans of trading Chinese stock just because we've seen that they're more likely to have reactions to political decisions. So you already have economic risk that's hard enough to manage. And then when a political decision, like with GoTo, right? An education company where overnight it drops and just gets hammered. I think it fell 90% or something like that because Chinese government decided that education companies cannot be for-profit companies. So something like that can happen. We want to avoid that. So Pinduoduo, that's not one for me. And then Baba, yeah, the Amazon of China, but gosh, 300 down to 91 bucks. For our style of trading the wheel strategy where we're looking to manage positions, Baba doesn't make sense. And if I'm looking at Tesla here, Tesla, I think it's a decent company, but chart wise, I just don't see strong support. So, higher PE ratio, which you could argue is acceptable for a tech company, for a car company, it's a super high PE ratio. They are profitable for the last 5 quarters. Annually, you probably know the story, but just recently in 2020, finally turning a profit that made them or gave them an opportunity to join the S&P 500. But it's decent. It's just no support, right? I don't feel like we have strong support here, and it's up 100% for the year. Sure, it could fall a little more and not be a concern. It's been up so much. Here's another one, Super Micro, SMCI. For the wheel strategy, this just doesn't make sense. We have a run from 100 to 340. If we're trading a risk defined strategy, right? If a trader said, hey, I believe we're going to rally back up towards 350, that would be a $90 profit, and I'm willing to risk $20 if I'm wrong. That, a 1 to 4 risk reward, you're not going to get that with a high probability setup where you're profitable most of the time like you are with wheel trades. But that might make sense from a risk defined perspective, not from a wheel strategy. So that's an easy no for me. If we look at end phase here, we talked about this one. Higher PE ratio. Actually, on the income statement, it wasn't really that big of an issue, but between end phase and CSIQ, I like CSIQ better. Also, if we look at where we're at here, CSIQ just recently starting to slide a little bit. We know it's down today, but end phase broke through support and has also, rather than being sideways for the year, been down for the year. So stair stepping lower, making lower lows. ATVI, another one. Here from a support perspective, there's just no support. You have this huge move up, no support. I want to trade sideways ranges and stocks and sell strikes near support. Alcoa, actually a nice looking chart if we go back to June, but if we look at the fundamentals here, div yield 1.2%, PE ratio 18. That's pretty good, not a problem. Income statement, annually, 3 of the last 5 years profitable, and quarterly, 1 of the last 5 quarters profitable. So from a fundamental perspective, I think there's better trades out there in a higher interest rate environment, just in case we have a soft landing for a recession, but now we see the economy is starting to slow down a little bit with interest rates staying high. I mean, this income here for the last 5 quarters doesn't look too hot. Chart's a little bit crazy here, and it looks like if we get through these support levels, there's some room to the downside. So I flagged that as a no. Crocs, I'm not taking this one. I've had some mastermind traders trade this and made money on this, taking it as an earnings play here and then able to sell below this support around 101, 102. I think this is a decent maybe. My concern is we're testing this, and if we break, it could fall, have a decent move to the downside. But as far as 5 quarters of profits, 5 years of profits, PE ratio 10.45, div yield, not paying a dividend, 96 available right now. That's a maybe. That's why I flagged it as a maybe. And we'll just finish this up here. 2 more. I mean, this is what we do every day with our mastermind group, by the way. We're going through trades together, analyzing things, trying to narrow it down to the best trades to risk money on. So GME actually starting to look like a normal stock, lower PE ratio, nicer ranges here. But again, 5 years of losses and 4 out of the last 5 quarters losing money. So, does it make sense to trade the wheel with something like this or a company that's making money? I'd rather trade something that's profitable. And the markets must be down a little bit because we're seeing a little more on the list. Yep. S&P now down 0.3%, NASDAQ down 0.8%. Dow still positive for the day. We're not going to spend more time on those, but just I hope it gave you a little insight into what we look for each day when we're using the scanner to find opportunities. And down days are usually the best days to trade the wheel and get some nice premium at strikes that make sense. Looking ahead to next week, core retail sales on Tuesday, pre-market 5:30 Pacific, 8:30 Eastern. We also have FOMC meeting minutes on Wednesday in the afternoon, 11 a.m. Pacific, 2 p.m. Eastern. Unemployment claims every week on Thursday. So next week, looking at the calendar, it's really all about retail and then those FOMC meeting minutes. If we look at the earnings analysis tool and we look at the calendar, and we go out a week, we see once again earnings season is winding down. However, we have Home Depot on Tuesday before the bell and Agilent Technology after the bell, TJX companies before the bell on Wednesday, Cisco Systems after the bell on Wednesday, Walmart Thursday before the bell, AMAT after the bell on Thursday. And on Friday, we have Deere before the bell. So there are a couple of names to keep an eye on next week. Maybe there are some earnings plays there. But overall, earnings winding down next week about retail and Fed minutes. So that's going to do it for today's Long Coffee with Mark. Next week, it will be Mark and Marcus again. If you have any feedback, if you like the show, have a comment, like a stock, like what we did today, leave a comment. If you like the video, please give it a thumbs up. And if you're new to the channel, please subscribe. Until Monday, happy trading, everybody.